So hello dear students, let's study AS9. AS9 revenue recognition, mandatory standard for all the enterprises. All the entities should follow AS9. And AS9 is applicable in every entity 24/7. Is there an entity which is not working for revenue, not working to get revenue? Revenue recognition is required by all the entities all the time. So like A16 is applicable only when there is a loan and there is a qualifying asset. A16 is applicable. Yes or no? But AS9 is applicable to all entities all the time. Every entity is focusing on increasing the revenue. What is revenue? So first point is revenue equals income? Revenue is something which is generated out of operating activities, day-to-day business. What you are earning out of your day-to-day business is called as revenue. And income includes all other sources of incomes also. So revenue from operations and other income gives total income. So revenue means what you are generating out of operations, operating activities. So here, meaning of revenue. What is revenue? So it is very important when you are getting into the standard, understanding the meaning of revenue. So please study, write. Revenue is gross inflow of. Revenue is gross inflow of 1, 2, 3. Revenue is gross inflow of cash, receivables, and other consideration. Okay, other consideration arising from ordinary course of activities, ordinary course of business, ordinary course of activities. So revenue is gross inflow of cash, receivables, other consideration arising in the ordinary course of business or ordinary course of activities from 1. Sale of goods. Sale of goods. Okay. 2. Rendering of services. 3. Use by others. Entities resources or enterprises resources yielding interest, dividend, royalty. What? I didn't understand. Okay, let's find out. We are breaking the definition into 3 parts. Revenue includes gross inflow of cash, receivables, other consideration. That's okay. Arising from ordinary course of business. That's also okay. From sales, perfect. From rendering of service, that is also perfect. So rendering of services, if you are an auditor, you are getting revenue by rendering services. Are you selling goods? No. If you're an advocate, are you selling goods? No. If you're an architect, yeah, you are rendering services. You are giving design services, maybe if you're an architect, otherwise financial services. So here, sale of goods, rendering of services, and last one is not clear. Use by others, entities, resources, yielding interest, dividend, royalty. So revenue includes this interest, dividend, the sale of goods, service, interest, dividend, royalty. What is this interest, dividend, royalty? For example, I am a financial institution. I am giving you my funds. So you, an outsider, using my funds. When you use my funds, you are giving me interest, which is interest as a revenue for a financial institution. Yes or no? Now you are using my funds in a company I invested, which means that company is using my funds That is why they are giving me dividend. Royalty, it's similar to rent. If you are using my building, you are giving me rent. So use by others, outsiders are using entities' resources, yielding interest, dividend, royalty. So what is revenue? Come on. What is revenue? Revenue. Okay, I can read from what is there in the screen. No. Just try to think and answer. What is revenue? Revenue is gross inflow of cash, receivables and other consideration arising in the ordinary course of business or activities from sale of goods, rendering of service, interest, dividend, rent. That's fine. Used by others, entities, resources, yielding interest, dividend, rent. Okay. Now, what is revenue? Fine. Now the question is when the standard address is when revenue to be recognized in the books. So I am the accountant of the company and there is a sale of goods. When revenue to be recognized, or I am doing services, when revenue to be recognized. I am a financial institution, when interest, when dividend, when royalty and other areas, other small areas to be discussed. Okay, so very small standard, come on, let's discuss. So what I am planning to do is, because it is theory, I'm not just reading through the theory, I'm writing first. It's not, I'm writing, it's already there in the book, but I'm writing first to grab your attention. Then we'll read. Okay, from first one I'm taking sale of goods. When revenue is recognized in case of sale of goods. When revenue is recognized in case of sale of goods. I want you to learn it as 3 points. Sale of goods. When revenue is recognized. 1. When ownership is transferred. This is T bar D, transferred to buyer. When seller has transferred ownership of goods to buyer. Ownership is transferred to buyer. 2. Significant risk and reward. Significant risk and reward of ownership transferred to buyer. Risk and reward. What is this? Say for example, 1st May 2026, you bought a mobile phone. Okay, first I am the trader, I am the shop, and 1st May 2026 morning, maybe 11 a.m. I sold a phone to Mr. X. And 1st May 2026 2 p.m. there is a theft. The risk of that asset is now transferred to Mr. X. Risk. Who will bear the risk of that risk of loss? Is with the buyer. Is with the buyer. Is with the buyer because seller has already transferred. Risk of the asset is transferred. When we are raising the bill in your name and we are transferring the asset and accepting the bill means the risk of the asset is transferred. Now, whatever reward you get from the asset, you take. The risk and reward of the asset is transferred to buyer. Okay. And this is not just with sale of goods. In every point you should write. So, this is not just in case of sale of goods, rendering of service, and in other cases also you should write this point. Ultimate collection of revenue. Ultimate collection of revenue is reasonably certain. Ultimate collection of revenue is reasonably certain. Ultimate collection. When do I recognize revenue? I sold this phone to Mr. X and it is a credit sales and that phone value is 1 lakh. When do I recognize revenue? Everything is transferred, ownership transferred, everything is done, but payment is not received. If payment is not received, I will pass the entry Mr. X to sales. Correct. But imagine if Mr. X is my uncle And when I raised the bill, he was like, don't forget I am your uncle. So don't ask me to pay for it. Now I am sure that my uncle is not going to pay me the amount. Then what should I do? Can I pass this journal entry in Mr. X to sales? If I pass the journal entry, my sales will increase. But I'm sure that I'm not going to get it. So next entry, bad debts to X. Pass either Madhya, bad debts to Mr. X. No. That is subsequent uncertainty. We create this. At the time of sale itself, if I am sure Mr. X is not going to pay me the amount, then it is a loss. My stock loss. It is like a stock loss. I should not pass it. I should not recognize it as revenue. It's a stock loss. I should not recognize it as a revenue. No revenue recognition can be done. So revenue recognition can be done when all the 3 points are satisfied. So study. Ownership is transferred to buyer. Seller transferred ownership to buyer. Significant risk and reward of ownership is transferred to buyer. Ultimate collection of revenue is reasonably certain. Is it not just with sale of goods? For rendering of service also we'll write this point. Okay, ultimate collection only when, because we are conservatives. Conservatism. Yeah. So now let's read this. Sales. Yeah. Revenue from sale of goods. It is recognized when all the conditions are satisfied. Seller has transferred the ownership of goods to buyer. Point number 1. All significant risk and reward of ownership has been transferred to buyer. Point number 2. There is no significant uncertainty in collection of the amount of consideration. Now all these 3 is satisfied. Revenue from sale of goods can be recognized. Are you clear? So we'll find out questions on this. So you need to write this provision. So first one is done. Now service. Let's discuss the theory. Theory will quickly finish off. Okay. Now services. When do you recognize revenue from services? Services meaning, as I said before, auditor is giving services. A repair shop is giving services. An advertisement agency is giving services. So how the service provider is recognizing revenue on services? So while rendering services, there are 2 methods of recognizing revenue. One is completed contract method. What is this completed contract method? Complete your duty, your work, your service. You complete it first, then recognize revenue. Example, if you are doing, as I said, a repair shop, complete that repairs, then you recognize revenue. Generally, or if installation of an asset, complete the installation, then you recognize revenue. So generally includes execution of a single act. Generally includes execution of a single act in short span. You can complete a work in short span, then you recognize revenue. Revenue is recognized after completing the service. Revenue is recognized after completing the service. Completed contract method. Now, next one. So, this is completed contract method. And other one is proportionate completion method. Proportionate completion method. Proportionate completion method generally includes execution of series of acts. Not clear. For example, you got the maintenance service of a flat. and or maintenance service of a production plant for next 5 years. So you're doing maintenance services. AMC of that flat or AMC of that production plant, annually you need to give service. So to complete the contract, it will take 5 years. Do I need to wait for 5 years to recognize revenue? No. So proportionately, as and when or a periodical basis, I can recognize revenue. As if my work is 10% complete, 10% revenue can be recognized, or 50% complete, 50% revenue can be recognized. So in case of AMC, generally monthly basis, they will recognize revenue. Are you clear? So if there is only one act which can be completed in short span, better wait. For an advertising agency, there is an example in your question. I'm an advertising agency. I got the advertisement of what product? Let's take it as shoes. Advertisement of a shoes or particular shoes. That shoes is very comfortable. I need to make a caption and I need to air that particular advertisement. Complete the advertisement, air it, let it come appears before public, then you recognize revenue. Are you clear? That is what completed contract method. So from a situation, I need to understand whether one act or a series of act. If one act, completed contract, series of act, proportionate completion. Okay, now let's find out. So this other areas we'll find later. Rendering of services. The 356 page number. Rendering of services. Revenue from services generally recognized as the services performed. Okay. The performance of service is measured by two methods. Completed service contract method. Revenue is recognized when the service is about to be completed and no significant uncertainties exist about the collection of the amount of service charges. This generally includes execution of single act. Okay. Proportionate completion method. Revenue is recognized by reference to the performance of each act. Revenue recognized under this method would be determined on the basis of contract value, associated cost, number of acts, other suitable basis. And further, the other point is same, no significant uncertainty exists about the collection of amount of service charges. So this includes execution of series of acts. So now revenue recognition norms, installation fees. It is recognized when the installation is completed and accepted by the clients. Okay. Admission fee. Say admission fees for an artistic performance. For example, you have taken the tickets for the musical show, for a music show by Shreya Ghoshal or A.R. Rahman. Once the event is taking place, you can recognize revenue. Or other special events when the event takes place. Tuition fees recognized over the period of instruction. If it is a 4-year course and the total fees is 1 lakh, 1 year completed, we will recognize 25,000 next year, 25,000 next year, 25,000 like that. Entrance and membership fees. See, entrance fee you might have studied in not-for-profit organization, maybe if you remember. Entrance fees, one-time membership fees, generally capitalized. So recognition depends on the nature of service. Entrance fees are generally capitalized, and if one-time membership fee is also capitalized, but annual membership fees recognized on systematic and rational basis regarding the timing and nature of service will be recognized over the period based on a systematic basis. Okay, so that is with regard to service. Now what? Interest, dividend, royalty. Come on, this is the easiest one. Interest. When an entity recognizes interest. Interest. You all know, maybe from the 11th standard onwards or from schools, you know, interest is recognized. How many months interest is due? Accordingly, 3 by 12, 5 by 12. So here they are telling interest. If you get a question on AS9, interest is recognized on time proportion basis. You should write interest is recognized on time proportion basis. Time proportion basis. Okay, interest can be recognized as revenue on time proportion basis. Dividend, how do you recognize dividend? Dividend recognized as income. Dividend can be recognized as income. This is the wording. When right to receive. When right to receive dividend is established. Right to receive dividend is established. When I'm sure that I'll receive dividend, then only I can recognize dividend. When this right to receive, when I'll be sure I'll get dividend? When the company declares dividend, that is upon declaration of dividend by the company. That is upon declaration of dividend. We used to say right in class, once dividend is declared, it should be paid within 30 days. So I'm sure I'll receive dividend upon declaration of dividend. Then last one, interest, dividend, royalty. Royalty, I was telling, best example is like rent. If there is a royalty, there will be a contract. So royalty is recognized when it gets due as per the contract. As per the contract, when it gets due, revenue can be recognized. So interest, what are the keywords? Time proportion basis. Dividend, when right to receive dividend is established, that is when the dividend is declared. Royalty, as per the contract, when the royalty gets due, rent gets due, it can be recognized as revenue. Okay, let me see from the material notes. Interest, time proportion basis. Royalties, as per the terms of agreement. Dividend, declares dividend. That is, revenue is recognized time proportion basis as per the terms of agreement on accrual basis. Revenue from dividend, when declaring company declares dividend. Okay. Now what are the other areas? Just see. So now the standard is also explaining what if subsequently. So if there is an uncertainty in collection. So what are the other areas? So what are the other areas? Other areas, we have some other areas to discuss, and let's finish off this one and then move on. That is, revenue is recognized when the ultimate collection is reasonably certain. Ultimate collection is reasonably certain. So, effects of uncertainties, where the ability to assert the ultimate collection with reasonable certainty is lacking at the time of raising any claim, revenue recognition is postponed to the extent of uncertainty involved. If it is uncertain, do not recognize revenue. Okay. When the uncertainty relating to the collectability arises subsequent to the time of sale, it is more appropriate to make a separate provision. So at the time of sale, that person was looking very creditworthy, was looking very confident. We thought that we'll get the payment, but subsequently there is uncertainty. Then you create provision. Okay. So when uncertainty of collection of revenue arises subsequently after the recognition, it is better to make once more provision for bad debts. In collection rather than adjustment in already recognized revenue. So what are the disclosures? When revenue recognition is postponed, disclose. When there is an uncertainty and revenue recognition is postponed, then disclosure is required. Then is it finished? No, some other areas are also there. Some easy areas, but requires some attention. Listen, you have gone to Lulu Connect and you are buying a laptop. So you bought a laptop and the payment is, say for example, 50,000. And you are telling, okay, today is February 15th, 2026. You are telling, okay, I'm ready to pay it now, but I'll take the delivery after 1 month. I'll take the delivery in March 15th, 26. because this is limited stock, right? I'm buying, but after 1 month only I'll collect it. I'll take the delivery, but you take this 50,000. Then when revenue is to be recognized by Lulu Connect, because Lulu Connect has made the sale, but you have not taken the delivery. So listen, revenue recognition when the delivery of good is delayed at buyer's request. Buyer's request. Delivery is delayed at buyer's request and buyer takes title and accepts billing. Recognize revenue immediately. Recognize revenue immediately. Recognize revenue immediately. Okay. Buyer's request. So that is not the seller's problem. So revenue can be recognized immediately. Revenue recognition when delivery of goods sold subject to conditions. I sold goods subject to conditions. Conditions like installation and inspection. So you're like, if there is a shopping mall and we need elevators, escalators, and I've given you orders. So I'm like, once that elevators are installed and it's inspected, then only I'll make the payment. Okay, so you are the elevator manufacturing company. When you will recognize revenue? Goods are installed after installation and his satisfaction. Goods are inspected and accepted by the buyer. Then only revenue will be recognized. Why? Why? Because we are conservatives. Because of conservatism. Okay. Now, sale on approval basis. I sold goods. Only once you are approved, I'll recognize sale on approval basis. So, I sold goods. Only if it is approved. Otherwise, you can give it back. It requires customer's approval. Otherwise, you can give it back. So, revenue should be recognized only when the buyer confirms his desire to buy such goods. Or, you write there, or time period elapsed. Time period for confirmation elapsed. I've given you 3 months time to confirm. Time period for confirmation elapsed. Time period is over. Then only I can recognize revenue. Or when the buyer confirms it. Now guaranteed sales. See, guaranteed sales can be any of these two. Guaranteed sales. 1 second. Guaranteed sales. Guaranteed sales can be any of these two. Okay. First one is, let's take an example. So there is a seller A and there is a buyer B. Seller A is a curry powder manufacturing company. Curry powder manufacturer, and seller B is a supermarket. So what the seller A has done, seller A has supplied some curry powders to the supermarket and guaranteeing the sales. So transferred 100 packets, and now what they are telling us, the sales will be completed in 3 months. They are guaranteeing the supermarket will be able to sell this 100 packets in 3 months. If not, they will take it back. Okay, so here sale is complete. In this case, sale is complete, but risk is still with the seller. Okay, so guaranteed sales means buyer is able to sell it again. So guarantee is given for the buyer. So when revenue will be recognized? Revenue is recognized once the time period elapsed. That reasonable time period is elapsed. Then in 3 months time, if there is no sales, it will be taken back. So after 3 months, A can recognize revenue. Okay, guaranteed sales. And also you please pay attention to this. Please listen. There is something called sale and repurchase contract. Sale and repurchase contract. What is the sale and repurchase contract? Listen. See, Mr. A sold 10,000 rupees or 1 lakh rupees worth goods to be limited. This is the agreement. Okay. And this is on, say, 1st February 2026. And they are agreeing to repurchase on 31st August 2027 at rupees 1,50,000. What is this? I sold goods to you for 1 lakh. After 1 year and few months, I will purchase the same thing from you. Sale and repurchase. I sold, then I am repurchasing the same thing from you for 1,50,000. There is an agreement like this. Sale and repurchase. So normally what we do is A sold, right? So A will pass the entry, bank to sales. 1 lakh. And upon repurchase, they will pass the entry purchase to bank 1,50,000. So my standard says, sorry, this is incorrect. This journal entry is incorrect. Why? They are telling. So let's read this contract once again. Mr. A sold 1 lakh rupees goods to B Limited on 1st September 2026. Let's analyze. Considering substance over form, that is reality over legality. Legally, this is a purchase or sale document. But considering reality, what is happening on 1st February? 1st February, Mr. A is getting cash, 1 lakh rupees. And goods worth 1 lakh is going out. And after 1 year and few months, Mr. A is paying 1,50,000 and getting the goods back. So my standard, it's not me saying, standard says this is a loan agreement or financing arrangement. This is a loan or financing arrangement and not sale or purchase. I didn't understand, but why? That is, Mr. A need a loan of 1 lakh. Mr. A ku 1 lakh rupees loan venam. Mr. A need a loan of 1 lakh. So this goods is given as security to B. So what happens? Mr. A is getting money. Goods are going out as security. And on 31st August 2027, goods are coming in. Security is coming in. When you repay the loan, so 1 lakh is the loan amount. When you repay, it is 1,50,000 along with interest. So what I am trying to say is sale and repurchase contract. Guaranteed sales means if you are not selling, I will take it back. Sometimes it can be in sale and repurchase contracts. Sale and repurchase contracts are not revenue contracts, are financing arrangements. So again, that will not be considered as revenue. Okay. Now warranty sales. Guaranteed sales revenue should be recognized as per the substance of the agreement, like financing arrangement or recognize it as financing arrangement, or after the reasonable period has expired. 3 months time there will be guaranteed sale, so I'll take it back. If reasonable period has expired, it can be recognized as revenue. Then warranty sales. What is this warranty sales? See, sales with warranty. I'm selling this calculator and I'm telling, okay, in case of any repairs, just bring it back, I'll correct it. Then recognize sales immediately, but create provision because they have the present obligation to rectify the repairs. So create provision for the unexpired warranty. Consignment sales. Do you know what is consignment sales? Have you heard of consignment sales? A will sell goods to B and B will be transferring it to C. So effectively B is acting as an agent. So B will be hereinafter called as, or from A will start. A will be called as consignor. There is an agreement between A and B. A will transfer the goods to B. B will be hereinafter called as consignee, and C is called as, what is C is called? C is called as the end customer. End customer. So consigner will be selling some goods to consignee, and consignee is just an agent, and goods are transferred to end customer by the consignee. So when should revenue recognized by A? When should A recognize revenue? A should recognize revenue only when the goods are sold to third party, that is end customer. Only when the goods are sold to end customer. So far what are the points we have read? If there is installation and inspection, only once the buyer is satisfied and it is inspected and accepted, then only revenue will be recognized. That is once it is complete. Sale on approval, only when the confirmation is received. Guaranteed sales, I will take back the goods. Can be a loan arrangement or can be a actual guarantee sales based on the substance of the contract. Revenue should be recognized. Warranty sales means sales with warranty. Recognize revenue and create provision. We need to repair the goods if it is defective. So create provision. Consignment sales, revenue is recognized when goods are sold to end customer. Then special orders and shipments. I got a special order. So when should I recognize revenue? Only once it is complete. Goods are ready for delivery. My work is complete, shipments, it's ready for delivery only, I can recognize revenue. Installment sales. If it is installment sales, definitely there will be an interest component. Revenue is equal to amount collected minus interest. Revenue of sale price excludes interest. So interest should be recognized proportionately. Interest income I recognize here, not as revenue. Okay. Then that's it. One more point, that is the first question in the, I'll take the study material first. We'll do the study material. This is revenue based standard AS9. AS9, sale of goods, renting of service, used by others. Okay, got it. The standard will not apply to, it's already given in our material, the standard will not apply to construction contracts, which we are going to study now, AS7. There is a separate standard. The standard will not apply to hire purchase lease agreement, separate standard, AS19. Revenue from government grants, AS12. Insurance companies, is standard applicable. Okay. Definition of revenue is clear. We have already seen. Agency relationship. See, if possible, please write it in the notebook. Principal and agent. Just write here, principal should recognize revenue on gross basis. An agent should recognize revenue, should recognize commission revenue only. Should recognize commission revenue. What is this? If you are booking a ticket via Book My Show, you are booking a seat in PVR. And PVR, the seat price is 180 rupees, for example. And there is Book My Show's commission, which you need to pay 30. So total you will pay 210. How this PVR will recognize revenue? How this Book My Show will recognize revenue? You pay 210 to maybe Book My Show. How Book My Show will recognize revenue? Can they recognize entire 210 as their revenue? No. Book My Show should pass the entry, bank account debit, I got 210, of which my revenue, commission is only 30. Balance is payable to PVR. How much is payable to PVR? 180 is payable to PVR. So PVR will be recognizing a revenue of 180. Book My Show, that agents always should recognize their commission revenue only. Are you clear? So I think that's fine. That's fine. Let's either go through our questions or study material questions. Let's read these questions. Let's read maybe 10 questions and then move on to study material. Given below are the following information of BS Limited. Goods of 50,000 were sold on 18th March 2023, but at the request of the buyer, these were delivered only on 15th April. Bought on this date but delivered on this date. What is the date of recognizing sales? Goods are delivered at buyer's request means revenue can be recognized on the date of sales 18th March. 13th January 2023, goods of 1,25,000 were sent on consignment basis, of which 20,000 of the goods unsold are lying with the consignee. Oh, so 1,25,000 is the sales we made, of which 20% goods are still lying with the consignee, which means 1,25,000 into 80% is sold to the end customer. So we can recognize a revenue of 1 lakh. We can recognize a revenue of 1 lakh. Now, 1 lakh worth goods are sold on approval basis on 1st December. The period of approval was 3 months, after which they considered sold. Oh, we sold goods on approval basis. So, you have time period of December, Jan, Feb, 3 months time. After 3 months time, it will be considered as sold. Buyer sent approval of 75% goods up to 31st January 2023 and no approval or disapproval received for the remaining goods. So 3 months time has elapsed, right? December, Jan, Feb. So 31st March, no approval has been received means how much revenue you will recognize? Entire 1 lakh. You are required to advise the accountant with valid reasons amount to be recognized as revenue. So first one, sale is complete but delivery is postponed at buyer's request. They should recognize the entire 50,000 on for the year ended 31st March 2023. That is 18th March 2023, next year lalla. Then 1,25,000 consignment. Consignment sales revenue until sold to the third party, 20% lying as unsold. So 1 lakh will be recognized. Okay. Third case, the total revenue will be recognized. Third case, therefore revenue should be recognized for the total sales. I am not reading it fully. Now, question number 2. Ruby Limited sold goods through its agent. As per the terms of sales, consideration is payable within 1 month. Okay, Ruby sold goods through his agent and as per the terms, consideration is payable within 1 month. In the event of delay in payment, interest is chargeable at 10% per annum from the agent. The company has not realized interest from agent in the past. Okay. For the year ended, company has not realized interest from the agent in the past. For the year ended, interest due from agent because of delay is 5 lakhs. Agent should pay 5 lakhs interest, but we have not collected any interest, realized any interest from agent in the past. The accountant of Ruby Limited booked 5 lakhs as interest income. Examine and discuss the contention of accountant. See, when do you recognize revenue? Generally, when the ultimate collection is reasonably certain. When there is a significant uncertainty in the collection, revenue should not be recognized. Yes or no? Here it is given that the company is not realized any interest from agent in the past means there is significant uncertainty in the collection. So as per AS 9, where the ability to assess the ultimate collection with reasonable certainty is lacking, the revenue recognition should be postponed to the extent uncertainty is involved. Revenue is recognized only when it is reasonably certain that the ultimate collection will be made. In this case, company never realized interest from the delayed payments. Hence, based on the past experience, realization of interest for the delayed payments by agent is very much uncertain. But if the agent, one more line, however, if the agents have agreed to pay the amount, there is an element of certainty involved, then 5 lakhs can be recognized. Are you clear? Hope so. Now, New Era Publications publishes a monthly magazine on 15th of every month. Okay. 15th of every month. It sells advertising space in the magazine to advertisers on a terms of 80% of sales value payable in advance and balance within 30 days of the release of publication. Okay, so in the magazine, if you need to give advertisement, 80% of the value you need to pay in advance, but balance 20% you need to pay only after 30 days or only within 30 days. The sale of space for the March issue was made in February. The magazine was published on its scheduled date. It received 2,40,000 on 10th March and 60,000 on 10th April. Understood. So you got March month advertisement revenue. 80% you have received earlier, 2,40,000. So which means 3 lakhs is the total revenue. And next 80,000 received in the next month. Not 80,000, 60,000. Sorry. Discuss in the context of AS 9 the amount of revenue to be recognized and treatment of the amount received from advertisers. What will be the treatment if a publication is delayed? That part we will do later. Otherwise, simple question. How much revenue will be recognized in the month of March? Entire 3 lakhs. What is the entry? Bank account debit 2,40,000. Receivable account debit 60,000. How much will be recognized as income? Entire 3 lakhs. So we are following completed contract method. Here in the given case, income accrues when the related advertisement appears before public. Advertisement service would be performed on the day advertisement is published. Hence revenue is recognized on that date. So 15th March 2020 is the date of publication of magazine. Hence 3 lakhs is the revenue to be recognized. 60,000 will be treated as due from advertisers, receivable, and 2,40,000 will be treated as payment receipt. Now, what if publication is delayed? That is completed contract method. I have not completed the contract. Publication is delayed. Then what is to be done? If the publication is delayed, I received 2,40,000, but I have not done my work. I received 2,40,000. അത് കിട്ടി പക്ഷെ ഞാൻ എൻ്റെ വർക്ക് ചെയ്തിട്ടില്ല. അപ്പോൾ എൻ്റെ 2,40,000 should be treated as advance received. So see this part. However, if the publication is delayed, revenue recognition also will be delayed because my contract is not complete. In that case, revenue of 3 lakhs will not be recognized and will be recognized only after the magazine is published. So the amount received, 2,40,000 which you received earlier, will be considered as an advance from advertisers. Are you clear? Now, Fashion Limited is engaged in manufacturing of ready-made garments. Okay. They provide you the following information on 31st March. On 15th January, garments worth 4 lakhs were sent to Anand on consignment basis, of which 25% garments were unsold. So 4 lakhs into 75%, 3 lakhs. 3 lakhs will be recognized as sales. Sales revenue. Now garments worth 1,95,000 were sold to Shine Boutique. But at the request of Shine Boutique, the sales were delivered on 15th April. But entire revenue will be recognized in on 25th March itself. On 1st November, garments worth 2,50,000 were sold on approval basis. Okay. The period of approval was 4 months. So November, December, January, February. Yeah, February. Buyer said approval for 75% of goods, but no approval or disapproval received. Okay, time period elapsed. So recognize entire 2,50,000 worth of goods. You are required to advise. So total revenue to be recognized is entire 3 lakh plus 1,95,000 and 2,50,000. Very easy. Similar type. Approval. On 10th. Next one. On 10th January, see, in that 5th question, it is more or less the same. But see this second point. On 10th January, Tom Tanner supplied shoes of 4,50,000 to Shani Shoes and concurrently agrees to repurchase the same on 11th April. So, which means sale and repurchase. What is the treatment? Sale and repurchase. For such transactions that are in substance financing agreement, the resulting cash inflow is not revenue and should not be recognized as revenue. Should not be recognized as revenue. Rest is fine. This is very similar kind of question. How will you recognize revenue in the following case? Installation fees. Once installation is complete. Advertising and insurance agency commission. Advertisement, in case of advertisement, when the advertisement appears before public. Insurance agency commission upon every so insurance agency commission revenue should be recognized. So mark this line, okay? Should be recognized on the effective commencement or renewal date. On a commencement date, agent can get commission, and renewal date also agent will get commission. So revenue can be recognized on the commencement date or renewal date. So subscription for publications. That is sometimes if you are say for example there is something called CA Students Journal. I don't know whether you are getting this CA Students Journal. When you are registering as a student, they will be asking whether you need journal. So say CA Students Journal, if maybe you are required to pay 1,500 or 2,500, I don't know exactly. But you will get this for 3 years, journals. Journals you will be getting for 3 years. If it is equal value of a journal, if 50 rupees journal is what you are receiving every month, then this 2,500 will be distributed equally over 3 years. Equally over 3 years. But generally, if 2,500 is the amount paid by one student, first year the journal value is only 50. Second year they are adding more content, so 75. Third year they are adding more content, so 100. So that 2,500 into 50 by 225, 555 is the revenue will be recognized in the first year. 2,500 into 75 by 225. Second year 833 is the revenue that will be recognized. 2,500 into 100 by 225. Last year 1111. So 555 plus 833 plus 1111. 1112. This will be the revenue recognition. So listen here. Revenue received or billed should be deferred and recognized either on straight line basis over time, where the items delivered vary in value. From a period to period, revenue should be based on the sale value, relation to the total sale value, which I was saying 2,500. So, this 2,500 should be distributed in 50 is to 75 is to 100 in the example which I was saying. Okay. Now, this part and all we have discussed, just you can go through 8 very similar question. Nothing new. What is the treatment of trade discount? There is a sales and we gave trade discount. Sales of 10 lakhs and we have given a trade discount of 10%. So effectively we collected only 9 lakhs. So what is the treatment of trade discount? We have not received it. So recognize it as a deduction from the sale price. Trade discount given should be deducted. So only balance will be recognized as revenue. So question number 9. Board of Directors decided on 31st March 19 to increase the sale price of certain items retrospectively from 1st January 19. In view of this price revision, with effect from 1st January 19, the company has to receive 15 lakhs from its customers in respect of sales made from 1st January 19 to 31st March 19. Accountant cannot make up his mind whether to include 15 lakhs in sales for 18-19. Same. I am against this question itself. Say for example, 2nd January, you are a customer, you already bought some goods worth say 100 lakhs. You are a customer who already bought goods worth 100 lakhs and it is a credit sales. Okay. Now 15th January, the board of directors retrospectively revised the price, and what I already sold, I sold for 100 lakhs. That goods price I retrospectively revised to 115 lakhs. So now the question is, the company should receive 100 lakhs from the customer plus 15 lakhs revision price. So customer should pay 115 lakhs. These figures were 100 and 115 were my examples. So here the question is just 15 lakhs addition is receivable from the customer. What do you think? Will the customer pay the amount? The question is, accountant cannot make up his mind whether to include 15 lakhs in the sales in 18-19. Whether sales already made for 100 lakhs, whether sales, that is revenue, to increase 15 lakhs. What do you think? What will be your answer? See, whatever be your answer, see what we have studied. For say at the time of sale of goods, risk and reward is transferred, ownership is transferred, but ultimate collection, is it reasonably certain? 100 lakhs will be certain, but what about that balance 15 lakhs? So the entity should make an assessment. So the point you should write is, so listen carefully. The price revision was effected during the current accounting period. As a result, company stands to receive 15 lakhs from its customers. Okay. Now, if the company is able to assess the ultimate collection with reasonable certainty, then additional revenue may be recognized. But if it is not reasonably certain, additional revenue will not be recognized. Are you clear? Yes. Then 10. Raj Limited entered into an agreement with Hina Limited to dispatch goods valuing 5 lakhs every month for next 6 months on receipt of entire payment. So, I am Raj Limited. Who is Raj Limited? Raj Limited is the seller. Seller entered into an agreement to sell goods worth 5 lakhs every month for 6 months. Hina accordingly made the entire payment. 5 lakhs into 6, 30 lakhs is paid by the customer. Okay. Raj Limited started dispatching the goods. In 4th month, due to fire in premise of Hina, oh my God, customer's premises got a fire, and Hina requested Raj not to dispatch goods worth 15 lakhs which is ready for dispatch. So already 1st month sales is done, 2nd month sales is done, 3rd month sales is done, 4th, 5th and 6th month, that is what 3 months Total 15 lakhs goods are ready for dispatch, but Hina, that is customer, requested for a delay. Okay, so what this Raj Limited has done, Raj Limited accounted 15 lakhs as sales. 3 months they have already sold. So that is recognized as sales and transferred the balance to advance from customer. Advance received against sales. Comment upon the accounting treatment by Raj Limited with reference to the provisions of AS9. So what you should say? No, Raj Limited should recognize revenue in 4th month, 5th month and 6th month also because goods are ready for dispatch. But it is requested by buyer to delay the dispatch. Therefore, revenue can be recognized. Transfer to advances not correct. Okay, so here revenue can be recognized when all the following conditions are satisfied. Seller of the goods have transferred to the buyer, ownership is transferred, significant risk and reward transferred. So hence the sale is complete but the delivery is postponed at buyer's request. Therefore recognize entire sales. Easy, easy. Now this is a different question game for example. There is no question number. This is question number 11. Okay. Question number 11. Answer has number. Question does not have number. Question number 11. A different question but very easy. Now, see what is this? This is a different question. When I have a confusion while reading the question, what should I do? What did I tell you? Read the requirement. What is this? Explain the stage on which you think revenue will be generated and calculate how much would be net profit for the year. Okay. So they are doing some activities. Raw material, maybe purchased raw material, cost and NRV is given. Converted to pulp, work in progress, cost and NRV is given. Rough and thick paper, work in progress 2 is given. Fine paper rolls, they are telling the manufacturing company has the following stages of production and sale. Okay. Say they are converting raw material to pulp, pulp into rough and thick paper, that paper into fine paper rolls. Fine paper rolls are ready for sale on this date. Sale agreed and invoice raised, delivered. So when should they recognize revenue? Sale agreed and invoice raised. Invoice raised means I raised invoice in the name of the customer. Okay. So when revenue will be recognized? Revenue will be recognized on 15th March. Sale is complete. When risk and reward is transferred. 2 lakhs and revenue 3 lakh 50 will be recognized and how much will be the net profit 1 lakh 50,000. So see, according to AS9 in a transaction involves sale of goods, performance should be regarded as being achieved. Seller of goods transferred, all significant risk and reward, no significant uncertainty exists, sale is fixed and determinable. So both these conditions are satisfied on 15th March. Sales are agreed. Therefore, net profit of 1,50,000 would be recognized. Okay. So question number 12. Question number 12 is a good question. This is a question on royalty or rent. When royalty or rent revenue is recognized? Royalty or rent revenue is recognized on accrual basis. Yes or no? Let's read the question. An infrastructure company has constructed a mall and entered into agreement with tenants towards license fee, monthly rental and variable license fee, a percentage on turnover of the tenant on an annual basis. I didn't understand. See, if you go to Lulu Mall, there is food court. In food court, there are various shops. Let's take the example of Domino's or KFC. How much revenue, how much they will be charging from KFC? They will definitely charge a fixed rent based on the space they have occupied. How much square feet they have occupied. Accordingly, they will be collecting a fixed fee. Also, there will be a percentage on turnover. How much is monthly turnover and a percentage also they will be charging. Okay. Now, the CFO of the company wants to account recognition of license fee as income. License fee is an income for 12 months during the current year and variable license fee as income during the next year. Since invoice is raised in the subsequent year. Comment whether the treatment decided by CFO is correct or not. Why CFO is saying like this? Fixed rentals they will recognize as income in the current year, and variable rentals they will recognize as income in the next year. Is it correct? If the rent is relating to the current year on accrual basis, the entire rent should be recognized as income in the current year itself. So what is given? Just read. AS9 revenue recognition is concerned with the timing of recognition of revenue. Amount of revenue arising on transactions usually determined by agreement. Okay. However, uncertainties exist. Okay, fine. Further, as per accrual concept, revenue should be recognized as and when it is accrued. Fine. Therefore, recognizing the fee as revenue cannot be deferred simply because the invoice is raised in the subsequent period. Hence, it should be recognized in the financial year on accrual. Therefore, contention of CFO is not in accordance with AS9. Okay. When revenue will be recognized in the following situations: where the purchaser makes a series of installment payments to the seller and the seller delivers the good only when the final payment is received. When revenue will be recognized? So this is like a special case. What you can do is revenue is recognized when the goods are delivered. Because normally when the bill is raised, sale is agreed, but here only deliver the goods only when the final payment is received. So revenue will be recognized only when the final payment is received or goods are delivered. Okay, generally in this cases, in case of installment, the seller will collect a deposit from the buyer. So on the date of deposit, revenue can be recognized. But here, for simplicity, you can write revenue is recognized when the goods are delivered or when the final payment is received. Where seller concurrently agrees to repurchase the goods, sale and repurchase, it is generally a financing arrangement. Goods are sold to distributors, dealers or others for resale only when the goods are resold. Commission on service rendered as agent on insurance business, then only when the service is done, that is insurance is commencement of a new insurance policy or renewal of a new insurance policy, commission can be recognized as income. Okay, so first one, the seller delivers good only when the final payment is received, should not be recognized until goods are delivered. Should not be recognized until goods are delivered means revenue should be recognized when goods are delivered. For sale, when seller concurrently agrees to repurchase, this is in substance a financing agreement. Revenue from sale of goods to distributors only when, however, in some situations so only once it is resold. That is easiest answer. Then commission effective commencement or renewal date. Then 14 also, let me read 14 and 15, then we'll move on to study material question. Then it is more or less repeated nature of questions. 14. PQR Limited sells agricultural products to dealers. Okay. One of the condition of sale is that interest rate is 2% per month for delayed payments. PQR Limited sells agricultural products to dealers. One of the condition of sale is that interest at the rate of 2% will be collected for delayed payments. Okay. Percentage of interest recovery is only 10% on such overdue outstanding due to various reasons. If I charge interest, the percentage of collection of interest is only 10%. During the year, company wants to recognize the entire interest receivable. So if there is a delay, say this is the company and this is the agent or dealer. If there is a delay, dealer should pay 2% interest. But the interest recovery chance, if there is 20,000 interest payable by the dealer, the chance of recovery is only 10%. Chance of recovery of interest from the dealer is only 10%. 10% chance ullu idu kittan. But the company wants to recognize entire interest receivable. So what should be the point you should write? Significant uncertainty in collection. Ultimate collection is not reasonably certain. So do not recognize interest unless it is received. So ability to assess the ultimate collection with certainty is lacking. Therefore, it should not recognize interest unless it is collecting it. Okay. Indicate in each of the case whether revenue can be recognized and when it will be recognized as per AS9. Trade discounts and, oh sorry, this is volume rebates. Trade discounts and volume rebates. Trade discounts and volume rebates will be reduced from the revenue. Whether goods are sold to distributors or others for resale. When the goods are resold, in case of a consignment sale, like consignment sale, only when it is resold, revenue will be recognized. Repurchase, it's a financing arrangement. Insurance agency commission, only when insurance agency commission can be recognized as revenue, only when a new policy, if on the effective commencement of a new policy or renewal of a new policy, agent can recognize commission. So, last one. On 11th March, clothes worth 50,000 were sold to X Mart. Okay, 11th March, we sold some goods to X Mart. But due to refurbishing of their showrooms being underway, or some renovations were going on in their showroom, on their request, clothes were delivered on 12th April. When should they recognize revenue? On 11th March itself, because customers requested to 11th March, title and accepts. Because what is the reason? Buyer request to delay it. Okay, then again, this is all similar type. I am not reading this. MCQ. So let's go to the study material and do study material illustration number 1. Study material AS9 illustration number 1. Listen. Zomato runs a food delivery business as per the, like Zomato. As per the arrangement, Zomato allows customers to order food from local restaurants and is responsible for delivery of food within stipulated time. During a particular year, it collects the money as under. Total price 200 lakhs, delivery charges 60 lakhs, GST 40, total 300 lakhs. How much Zomato can recognize? Zomato has received 300 lakhs from the above orders. So how much revenue Zomato should recognize? Zomato's income is only delivery charges. So Zomato can recognize revenue only 60 lakhs. So the risk and reward associated with the food item are not with Zomato. The customer has ordered food. Okay, fine. Restaurant should get the money. Hence it should recognize only the revenue for Zomato. Therefore is only 60 lakhs. Revenue for restaurant is 200 lakhs. And GST is a liability to be paid to the government. Okay. Now sale of goods. AB Limited sells goods to CD on 1st March. CD is having significant cash flow issues. So your customer has cash flow issues. However, it is trying to raise funds through bank loan to be able to run its operations in future. On 5th of May 2011, CD is able to seek the funding and expected to be able to pay for the goods in future. At the time of sale, it is difficult for AB to ascertain whether it is able to collect the amount from CD due to poor financial conditions. So, how revenue recognition should be done by AB? AB should not recognize revenue. Here, what should be the answer? AB should not recognize the revenue as there is significant uncertainty in collection. So, once that uncertainty is over, now you can recognize. That is 5th May. If you feel that they will give the payment, then you can recognize revenue. Until that date, revenue should not be recognized. Okay. If revenue is not recognized, then what we should do? It is goods lying with customer, not confirmed as sale. Goods lying with customer. Okay. It will be shown as inventory only. Goods lying with customer. AB sells goods to CD on 1st January for 2 lakhs. After the sale was made, CD is having significant. After the sale was made, CD is having significant cash flow issues and it is trying to raise funds. So at the time of sale, if there was no uncertainty, you can recognize revenue. CD to sales. It is trying to raise funds through bank loan to be able to run its operations. However, it is unable to do so and has gone for liquidation. So on 15th March, subsequently, there is an uncertainty arising. Then you write off it as bad debts. So here what will be the journal entry? CD to sales. Then bad debts to CD. Okay. Rendering of service is okay. We have gone through other source, interest, royalty, dividend. During the year ended 31st March, ZX Enterprises has recognized 100 lakhs on accrual basis from dividend. Accrual basis for dividend, is it correct? No. So dividend from investments in shares are not recognized in statement of P&L until a right to receive payment is established. In the given situation, dividend is proposed while it is declared on 15th June. Thus, right to receive the payment of dividend gets established only on 15th June. So this is not correct. Now, Y Limited used certain resources of X Limited and X Limited received 10 lakhs and 15 lakhs as interest and royalty. You are required to state whether on what basis this revenue will be recognized. Come on, what an easy question. I'm sure you are not going to get a question like this. Interest is recognized on time proportion basis and royalty will be recognized on as and when it is due on accrual basis. So interest on time proportion basis, 10 lakhs. Royalty on accrual basis. Okay. Now some conditions. Delivery is delayed at buyer's request. Example, sale on approval basis. Sold subject to these are written already in the books. So sale and repurchase, trade discount and volume rebates, cash discount. What is trade discount and cash discount? Trade discount means because the buyer is buying a large quantity, the seller is giving a trade discount. That is at the time of sale itself, there is a trade discount. So what is cash discount? Cash discount. If sale is on 15th January, there is a sale of 1 lakh and I have given you a 3 months credit period. So 15th Jan, Feb, March, April 15th only you are required to pay. But you paid on 15th March after 2 months. So I'm happy. So I gave you a 2000 rupees discount. So you need to pay only 98,000. So what is the treatment of this 2000? This 2000 discount I am giving on a subsequent date. So here on sale I am passing the entry debtors to sales. And cash discount I pass the entry cash 98,000, discount 2,000 and to debtors 1 lakh. So cash discount, what we will do? Cash discount will not be reduced from revenue. Cash discount will be shown as an expense. Read this. Definition of revenue represents gross inflow of cash from sale of goods, provision of service. Any cash discount given should not be deducted from revenue. Revenue is therefore recognized at gross amount and cash discount will be recognized as expense. But trade discount at the time of sale itself, so that will be reduced. Consignment sale we have seen. No, that's an example. Effect of subsequent uncertainties. We'll be creating provision. Disclosure. If any revenue recognition is postponed, we'll do the disclosure. Illustration 6. Board of Directors decided on 31st March to increase the sale price retrospectively, which we have already seen. So there is uncertainty in collection that we are not reading. Now a claim lodged with Railways in March for loss of goods of 2 lakhs had been passed for payment in March for 1,50,000. No, March 2013, no entry was passed in the books of the company when claim was lodged. Advise P Limited about the treatment of the following in the financial statements of accounts for the year ended 31st March 13. See, we have filed a case against Railways, okay, for loss of goods on March 2011. There was a loss. 2 lakhs rupees worth goods lost. And March 2013, we got 1,50,000. No entry was passed on this date. So whether it is correct, another question. What we should do? There is no significant certainty in collection. Do you think this 2 lakh rupees we will receive or goods can be recovered? There is no certainty. So it should be recognized only upon receipt. That is what correct. Okay, let me read. As per AS 9, whether the ability to assess the collection with reasonable certainty. അതാണ് എപ്പോഴും point ആയിട്ട് എഴുതേണ്ടത്. Is lacking at the time of raising any claim. Revenue recognition is postponed to the extent of uncertainty is involved. Uncertainty involved. When recognition of revenue is postponed due to effect of uncertainties, it is considered as revenue of the period in which certain to be collected. Okay. So 1,50,000. So this transaction, this is not a prior period item. Receipt of 1,50,000 shall be recognized as revenue in the current year. We have not studied AS5 or AS5, prior period item, extraordinary item. That we will do soon. Okay. MCQs. Come on, quickly. Which of the condition mentioned below must be met to recognize revenue for sale of goods? Entity selling does not retain any continuing influence or control over the goods. Yes, control should have transferred. When the goods are dispatched to buyer, yes. Revenue can be measured reliably. Supplier is paid for the goods. So supplier is paid for the goods. Not correct. Reasonably certain that the buyer will pay for the goods. So option 1, 2 and 5. Option 1, 2 and 5. Consignment inventory is an arrangement whereby inventory is held by one party but owned by another party. Which of the following? So there is an A consigner, B consignee and C end customer. So let's think that A, B, C and read the options. Manufacturer cannot require the dealer to return the inventory. Manufacturer is having the power. Until the sale is happened to end customer, the power is with the manufacturer. Dealer has the right to return the inventory. No, dealer should transfer the goods. B should transfer the goods to C. B is an agent and B should do according to what is the direction received from A. So A can require return. So first option is wrong. Second option is also wrong. Manufacturer is responsible for pricing the goods. That is correct. Manufacturer is responsible for holding the goods. No, goods are held by B. And any changes in the pricing can only be approved by dealer. No, dealer does not have any power. So option C is the correct answer. Option C. Now, which of the following transactions qualify as revenue? Sale of 20 lakhs made under consignment sales. No, when goods are sold as consignment sales, only when it is sold to the end customer, ultimate customer, then only it can be recognized as sales. Sale of an old machine. See, sale of machine and all is not revenue. Service provided to the customer in the normal course of business. Yes, it's revenue sales. Sale of 25 lakhs made under consignment sales. That was option number 1 also. Okay, 4. So option C is the correct answer. The accounting club has 100 members who are required to pay an annual membership fee of 5,000 each. During the current year, all members have paid the fees. However, 5 members have paid an amount of 10,000 each, right? Of this, 3 members paid the current year's fee and also previous year's dues. Oh, out of 5 members paid 10,000, 3 paid last year's extra fine and 2 paid next year's. Revenue from membership for the current year. Come on, previous year, next year, please don't come in the picture whether received or receivable. Revenue is 5,000 into 100, 5 lakhs. Option C. Previous year and current year, please don't come to, previous year and next year, please don't come to current year. Revenue will be recognized as 5 lakhs. Is there any outstanding? I'll record separately. Advance received also will be recorded separately. Now, I think the last, MCQ. FlixNet International. Netflix offers a subscription fee model to allow and paid subscribers an annual viewing of movies, sports events and other content. We know that. It allows users to register for free and have access to limited content for 1 month without any charges. Just come and watch Netflix movies for 1 month without any charges but limited. After 12 minutes, pay. You will be getting a mail or you will be getting a message, pay to watch next. The customer has right to cancel the subscription within a month's time, but it is required to pay for 1 year subscription fee after the free period. XY has subscribed for free viewing on 1st March and after 1 month has agreed to pay the annual membership and has paid 1200 on 31st March 11 for subscription, which is valid up to 31st March 2012. Revenue that can be recognized by FlixNet for the year 31st March 2012 is, so after 1 month, 1st March you started viewing and after 1 month they paid, on 31st March 11 they paid 1200. So how much revenue can be recognized by Netflix for the year 31st March 2012? So 31st March for the next 12 month subscription, 1 month. So enter 1200, option B, right? Option B. Enter 1200 is relating to the next year. So no, 31st March only he paid. That is for April to 31st March 2012 of the next year. So enter revenue. Now they will recognize it as bank to advance. Next year advance to revenue. Bank to advance, advance to revenue. Yes. So now we have 4 scenario-based questions. Let's read and try to answer independently. Okay, listen. GH manufactures and sells televisions. Okay, the televisions are shipped to the customer by sea. Or you need to transport it through a sea. And in order to transfer the risk related to the shipment of the television, GH also gets an insurance coverage for the goods while they are in transit from the factory to customer's location. That is, the risk of transfer is with which party? What do you think? Is the risk of transferring the goods is with customer or risk of transfer is with the supplier, manufacturer? Yes, risk of transfer is with the manufacturer. That is why manufacturer has taken insurance coverage. So once the goods are ready for shipment, risk is not transferred. The insurance policy will reimburse GH for the value of goods in the event of loss or damage arising any time up to these goods reaching customer's location. Legal title passes when the goods arrive at customer's premises 1 month later. When should entity GH recognize revenue in the books? Come on, guys. This you all can answer. The title passes only when the goods reaches customer's premises, means revenue can be recognized only when the goods are delivered at customer's premises. Risk and reward is not transferred upon that or due in that transit. Only when the goods reaches the customer's premises it is transferred. Okay, fine. The following information of Meghna Limited is provided. Goods of 60,000 were sold on 20th March, but at the request of buyer these were delivered on 10th April. Revenue will be recognized on 20th March or 10th April, 20th March. On 15th January, goods of 1,50,000 were sent on consignment basis, on which 20% of goods unsold are lying with the consignee. So which means 1,50,000 into 80% revenue can be recognized 1,20,000. 1,20,000 worth goods were sold on approval basis on 1st December. The period of approval was 3 months, after which they are considered sold. Buyer sent approval of 75% goods for 31st Jan and no approval or disapproval received for the remaining goods till 31st March. So 3 months period has already expired, so revenue can be recognized during the year 11-12. Apart from the above, the company has made cash sales of 7,80,000. Trade discount of 5% was allowed on the cash sales. So 7,80,000 minus 5% is the revenue that can be recognized, because 5% trade discount means at the time of sale itself we have given. So only 7,41,000 you have received. Very easy. I think this one is a good question. I want you to mark this as important. For the year ended 31st March 11, KY has entered into following transactions. On 31st March, KY supplied 2 machines to its customer ST. So KY is the supplier, sold machines to ST. Both machines were accepted by ST, which means risk and reward is transferred to customer on 31st March. Now we need to read further, but if the information is only up to this, we can say revenue can be recognized on this date itself. Now, machine 1 was a machine that was routinely supplied by KY to many customers, and the installation process was simple. Machine 1 was installed on 2nd April. So 31st March we sold and installed on 2nd April. So revenue can be recognized on 31st March itself. For machine 1, revenue can be recognized on 31st March itself, because it is accepted and the installation process was simple. Machine 2, being more specialized in nature, requires installation process which is more complicated, requiring significant assistance from KY. Machine 2 was installed between 2 and 5, 2nd and 5th of April. Details of cost and sales price are as follows. Sale price of machine 1. Machine 1, 31st March you recognize as revenue. Cost is 1,60,000. So a profit to be recognized is 1,60,000. Machine 2, 3 lakhs cost of production and installation fee. How should the above transactions be recognized? What about machine 2? When do you recognize the revenue of machine 2? Machine 2's revenue can also be recognized on 31st March itself, because it was accepted by the customer. So they can recognize revenue 3 lakhs. Risk and reward is transferred to customer. So profit of 1,50,000 can be recognized. But the installation fee is for services rendered. So installation fee you recognize as revenue only once the installation is complete. Is it correct? Yeah, let's go and check. Machine 1. Machine 1, as the installation process simple, revenue will be recognized on 31st March itself. So 3,20,000, 1,60,000, 1,60,000 profit will be recognized. Is already accepted. The revenue will be recognized on 31st March. Machine 2. Installation process for machine 2 is more complicated, require assistance. However, the question specifies that the machinery is already accepted. Risk and reward is with ST. Assuming there is no further approval or acceptance required, revenue can also be recognized on 31st March 2011. So 1,50,000 can be recognized as profit. However, installation fees rendering installation service cannot be recognized until the installation is complete. Are you clear? Now the last question. What is the last one? PQR sells. Oh, this I think we have already read in the booklet. PQR sells agricultural products to dealers. One of the conditions of sale is that interest is at the rate of 2% per month for delayed payments. Percentage of interest recovery is only 10% on such overdue, outstanding, due to various reasons. During the year 11-12, company wants to recognize the entire interest receivable. Do you agree? No, because dealer should pay you interest for delayed payment, but recovering that interest from dealer is a tedious task. We can maximum recover only 10% of interest. So ultimate collection is not reasonably certain, or you should write significant uncertainty in collection. Significant uncertainty in collection. Therefore, revenue should not be recognized. Significant uncertainty in collection, so revenue should not be recognized. Okay, so let's read the answer given. As per AS9 revenue recognition, where the ability to assess the ultimate collection with reasonable certainty is lacking at the time of raising any claim, revenue recognition is postponed. Okay. So PQR cannot recognize interest unless the company actually receives it. So we have already done this question. So with this, I think we have done a decent investment in AS9. That is fine. Study well. And in case of any doubts, please comment below. I'll clarify as early as possible. Thank you.